Stephanie Link. I'm Chief Investment Officer at TheStreet. Here with me is Senior Real Money Contributor Dan Dicker. We're going to talk a little gold.
Little gold today, Stephanie, because I've been, I think, for my entire 25-year commodity career, basically bearish on the metal. But this time, I think I have a good reason to be bearish on the metal. It's not had the kind of stellar year it's had for the last 7. That's clear. I mean, we've seen gold do particularly poorly. It's down for the year. And what I've seen, in fact, was for the last 3 weeks to a month, a rally in gold that was based upon 2 things. One, an equity market that looked like it was really sinking fast, a bond market that was in free fall, and a Syrian problem, or at least a potential problem, that was driving hard assets higher against other softer assets. And all of those things seem to be leaving the scene, at least right now. You know, the Syria thing seems to be, at least for now, on the back burner. It'll go through the process in the UN with the Russians. Equities have found their legs all of a sudden again, surprising me. And again, the bond yield, even on the long bond, 3% seems to be like a top limit, at least for now.
So is this just gold? Is this gold and silver? Is this gold and commodity trade in your
Right,
mind?
and I have a different viewpoint, a very, very different viewpoint on oil as compared to gold. I am kind of an oil-centric guy, and I do believe that this dip that we've had because of the help, or at least the help out on Syria, is a buying opportunity, and I've spoken with that with Jim, into some of the domestic E&Ps and oil. Gold, on the other hand, I think has no intrinsic value. I know the gold bugs will send me some really nasty messages because of this, and I'm kind of afraid to poke them in the side with a sharp stick. But the truth is, at least oil, if everything goes wrong, you can still burn it for some heat. Gold, you can use as a doorstop.
So this is kind of interesting, though, because it circles back on what a name that I would actually own that has a little bit of gold exposure would be Freeport,
right,
which is 10% of their production is gold. So it's not that meaningful, but
right,
it certainly bounces when gold goes higher. It can bounce. But interestingly, they're actually doubling down on oil, right?
That's correct.
With their acquisition.
That's correct. So, and again, their copper holdings, particularly in Indonesia, to me, play that stock into that stock a lot more than the gold trade does.
So would you be a buyer of Freeport?
I like Freeport over the very, very long haul because of the copper holdings, not necessarily because of the gold holdings. To me, gold has had its run and now is done. Copper never had its run, and we're waiting for the day when it will.
And no one's valuing these energy assets at all at this point. So
to
I think
me,
that's your
very
upside.
low. That
yes,
is definitely the upside.
That's your upside. Well, terrific. Thanks so much for your insight, Dan. Thanks very much.